now. Let me zoom in. As you can see, from this low to the break, we have that gap in the middle there, yeah? And this is a one bullish candle pushes up before the push down, yeah? And I'll talk about shit wicks after this as well. But this is a clean 5-minute push up, push down, takes the low of that 5-minute. So in terms of like order flow, what should happen was, if it wants to continue bearish, it should continue from this high, yeah? The fact that it's gone and broken what was responsible for breaking this low, the supply here, right, was responsible for breaking that demand. Now it's gone and broken it. So basically what happened is that demand has overcome the supply. Then that shows us that bullish intentions, right, coming from that 4-hour POIs, or that we may want to see higher pricing, yeah? So because we have that 5-minute chalk now, what do you do? Same procedure, yeah, same process. Was we go into the 1-minute time frame and we look for 15-second chalks, yeah? So let's talk about this loss first, yeah? Same entry model. We have 5-minute bullish range. We have the discount, which is obviously anything below 50%. We have this POI in the extreme, which I think it was a 2-minute time frame, yeah. So we have a 2-minute bearish sell to buy engulfing candle, right? Price comes into it, and do we get a 15-second chalk in here? Where is it going? There you go. As you can see, right, clean, very clean. Here, push, pull back, break the low, and then it even flips and breaks the high. So you can just simply enter as it mitigates stop loss below the low, and it's a valid loss, yeah? Very, very clean loss, very simple textbook entry. You have to take it. There's no problems taking it. Of course, you have to take this trade. You don't know, because this one and this one and this one, they all look exactly the same. So you don't know if this one was going to win. Yeah, you don't know what's going to happen. So you have to take them. Like, I'm 100% going to risk my money on this trade because I'm going to take this one as well, like, because they all look the same. So if I was going to take this one, why would I not take this one? Why would I not take this loss or this one? Because they're all the same, right? So this entry right here is exactly the same setup, right? Because we have now 5-minute bullish order flow range from here to here, breaks this 5-minute here. We have the 1-minute POI in the extreme, which is on another time frame, I think 2-3 minute. Yeah, 3-minute candle here. This one, this sell to buy engulfing candle, right? Price comes into it perfectly, gives you a 15-second chalk, which is this one lower is a valid chalk, but it's the one I would take is the higher one, just because it's more concrete. Like, it's just more of a proper range, right? More of like a proper high to get broken. This one is very tiny, very small. Like, it is valid. You know, you can take it off of this. It's a little bit riskier, I think, a little bit more aggressive, but it's valid. But personally, in terms of like a proper chalk, like proper high and low, this just looks more reliable, right? So then as it chalks, right, it then comes back into the POI, right? Either you took it off this first one here, or you took it off this mitigation, yeah? And as you can see, the 15-second, right, it's aligned, yeah? Do you see how it's aligned? Like, if it wants to chalk bearish, it have to chalk here, right, to come back bearish, right? But it was aligned. So when it mitigates, you just enter. Its stop loss is below this low, and that's fine. You're chilling, right? And then that was a clean 10-hour trade. You know, it went even more, but you know, you just need to be capitalizing on your 10-hour trade, and that's it. Like 1% risk, 10-hour, you pass anything, right? Luckily, it didn't hit break even on this trade after it went to like what, 6-hour. And then again, let's say you missed this trade and you want to catch the re-entry, then it comes back into the 1-minute POI, gives another 15-second chop right here, clean. That's a loss, valid loss, clean, yeah? And then after that, it gives you another 15-second chop, which is from this low to this high. As you can see, bullish candle, gap in the middle, breaks the low, breaks the high, yeah? Mitigates, 1 pip stop loss, you can just simply enter this on the chop itself. That's what I would do. And then that's it, take it. Again, this one, the 10-hour trade win, perfect, right? I seriously tried to pause to take notes. You need a time machine. Yeah. But you all understand like how it's all the same. Like, as you can see, every single one of these trades, 5-minute bullish, 1-minute POI, which is the ST flip. It's in the discount. It comes in, you get a 15-second chop again. Again, enter on the break of the 15-second, which is there, right? It pushes up, pushes down, gap in the middle, bullish candle, breaks the high, enter right here. right? Again, 1 pip stop loss as well, so small, so you don't need to wait for like a mitigation here. Yeah. And if you did wait for mitigation, you probably miss it, or you could get in on this wick, right? But again, another 10-hour trade, right? So any one of them, like, yeah, there's 2 losses, valid too, but all of them like hit 10-hour. So I know a question is gonna say, wait, I know there's a question that says, how far coming out of a 4-hour area of interest do you still use a 5-minute model? So this is what I answered on the chat in the group earlier, was that, this is your 4-hour zone. Yeah. When it comes in to mitigate, I will continue to look like for these 5-minute ranges in this area until we come into like the opposing 15-minute like supply zone. Like, for example, like, yeah, as you can see here, the 15-minute is bearish. Yeah. So what price could do is this. Yeah. So price could do that. So why would I look to continue using 5-minute here? I'm not going to do that, right? But anything that's inside here or just coming out of it, right, very close to it, it's never going to be up here, right? You're never going to see me or anything like taking 5-minute entries up here. No, it has to be very, very close to the 4-hour POI, which is right here. Yeah, coming out of it. Right. As soon as now we come into that 50-minute supply zone, 50-minute bearish, right? I'm not going to look for any more buys, right? Because essentially, if it could do this, then I'm going to look for sell using this model there, that 15-minute model, right? Because now we're outside of a 4-hour zone, right? Now we need to see the 15-minute range, right? 15-minute bearish comes in. We need to see inducement on the 15-minute time frame or the 1-minute time frame inducement, then the 15-second alignment, and then take 1-minute chop, 15-second chop. Yeah. So, does anyone have any more questions? Let's see. When entering 15-second shock, we should cover the 1-minute low. If you can cover the 1-minute low and your stop loss is small enough, then yeah, you should do. If you can't do that because stop loss would be too big, then just you can cover the 15-second low. Yeah. Is it going to be deleted today? No, this one stays on till next Sunday, so don't worry. It's like Sunday to Sunday, so whatever happens today goes on to next Sunday. Realistically, we would have taken only one of these trades live since we didn't get a TP before the next one. Yeah, exactly. That's why I said, like, if you take this one, then I'm not taking any more. But if you miss this one, then you catch this one. You catch the loss, then you have to catch this one. Yeah. Unless if I'm on like a personal account. If I'm on a personal account, I'll take this and be at break even. I'll take this and take the loss. Take this one, go break even, and then take this one because you have like 500 leverage. So like you can take all 3 of these on your personal account. But unfunded, I just take the one because I want to just lose one time or win one time. I want to know if I'm right or wrong, like that one time. Why am I gonna like open my capital and the account, like expose it to so many more trades and stuff? Plus, you literally can't take that many trades unfunded when you're risking 1%. Sometimes you can only do like one. So it is what it is. Can you also go over the third entry? I just did that, yeah. When we have, wait, I think when we have a first 15-minute chop that causes for a pullback, yeah, I'm gonna do that. Does it have to be a 1-minute POI and a 5-minute premium discount? Can we use 5-minute POI? Yeah, it needs to be like 1 minute up to like 4 minute. Well, usually 3. I like to do like 1 to 3, but I don't want to use a 5-minute because then what happens is like 5-minute starts becoming like a huge POI, for example. You don't want to be taking like so many hits and stuff coming into it like this, like 15-second here. You want to limit down the amount of trades that you can possibly take. Don't try and take 5 entries coming into like a POI. No, just a 1 or 2 max. Yeah, like that's it. If BE, you can take another. No inducement for this approach. Yeah, no inducement needed because we already have 5 confluences in this favor. Yeah, 5 confluences. We have the 4-hour POI. Yeah, we have then 5-minute order flow range in your favor. We have the like premium and discount of the range. We have the 1-minute POI. Right, we have 15-second chuck in your favor. Right, so we have 1, 2, 3, 4, 5 already. Yeah. Same with the other one. This one as well. So we have at least 5 because we don't have the 4-hour zone to say that's one confluence, right? what we do have instead is a 15-minute POI as a confluence, right? Then we have 15-minute or 1-minute liquidity inducement, right? We have the 15-minute POI. I mean, we have the 50-minute order flow range in our favor, pro trend, right? Then we have as well the premium and discount of the range, and then we get the 1-minute chalk, and then we also get a 15-second now, right, in our favor. So we actually have 6 confluences for this one, right? But it's very important to have these for this entry model because it's not coming out of a high time from POI on the left, so it's kind of like in no man's land. So when it's like in no man's land, you're just in middle of nowhere, it's just imbalance or whatever, then you need to wait for proper development of price. You see what I'm saying? Like a proper base. Like it needs to give you something that you can work with. Yeah, you can't just work with thinner, right? On average, your 10-hour target range, how large should it usually be pip wise? Yeah, obviously 15, around 15 pips. Yeah, like my usually like in London, usually like stop loss are like 1 pip, 1.5 pips max. New York, 1.8 pips or something, 1.9 max, around that, like below 2. So obviously, yeah, 10 hours what I go for. And obviously, if you look at the statistics and so as well, like don't try and cut your trades short, like 5, 4R and stuff, 6R. Like if you look at the stats, yeah, you can't mess about with the stats, because if you start cutting your trades short, you start taking random trades, you start doing random stuff, then of course your trading and your results is not going to match the stats. Yeah, it's not going to match the actual strategy results, is it? Like you're not fully, like I say here, executing flawlessly. You're not fully capitalizing on the strategy if you're just not following the rules and following like what you should be doing, right? You're messing up with the sequence and the probabilities at that point, right? So you need to make sure they all look the same. They're all like valid, like completely high probable trades, either this or this, for example. And that's it. Like I take the same setups all the time. So we should all agree on keeping stop loss from 1 to 2 pips max. Yeah, we should wait for another 15-second chop if it's bigger than that. Yeah, you should. Can be also another extra strategy for data. It doesn't normally happen, so it's nothing really extra to add. Like once you get the 1-minute chuck in 15 seconds, like that's it. Like there's not really another chance after that really to get in again on the 15 seconds. It's very rare, very rare. It could happen. Trade management is very simple. Yeah, trade management is very, very simple. Like, for example, I keep things so simplistic and easy, like so it's so easy to follow. And all it is simply is, let's say if I was to draw it out, right? 1-minute chuck, 15-second chuck, right? 1-minute boss, yeah. And you entered on the 15-second chuck like this, right? As soon as it 1-minute boss here, then yeah, like move stop loss to break even. Yeah, it's that simple. Like if this 1-minute boss, right, is like it's too close to your entry, right? For example, let's say it's like here, so not here. The 1-minute boss is like down here, right? Let's say it's too close to your entry, and you know that price could easily tap back into your entry, like here, for example, right? It's too close, right? So when the 1-minute is too close, and then you could simply mitigate again, right? Then just wait for another 1-minute boss, right? The second one. So wait for 2, right? Then after this one, then yeah, 100% just go break even. Like that's it. Because now, in theory, price should now not break that 1-minute low if it wants to continue high pricing. Yeah. If it goes and breaks that, most likely it might just go and hit stop loss anyways. Yeah. And in terms of the statistics, in terms of like real life trading and experience and everything, I've seen a lot of times that after this, the 1-minute boss happens, like it doesn't normally come back to your entry. Yeah. After 1-minute boss happens, it doesn't come back. After 1-minute boss or 1-minute chalk happens, it just doesn't come back. Right. So I will take that risk and go break even and risk hitting break even rather than taking so many more losses, if you get what I'm saying. Yeah. The other thing is this scenario where you have 1 minute boss would be here, right? But let's say you entered under 15 seconds in that 1 minute POI, 5 minutes bullish, right? 1 minute POI, you entered under 15 seconds here. Yeah. So the 1 minute is too far. Like this could be about 10 pips, 5, 6 pips away. Yeah. I'm not gonna wait for this to go break even, right? I'm not gonna wait for price to go to like 6R, 7R before go break even. So what am I doing instead? Now I'm entering under 15 seconds. What I'll do is wait for 2 15 seconds boss to go break even. Okay. And now price in theory should continue to respect this bullish 15-second order flow high, like high lows to continue and breaking that 1 minute, right? And then by then that's like 10R to here. But yeah, and then yeah, 10 hours, that's it. In terms of like management, 10R full TP, close it. Usually that's what I do on a funded account and stuff and challenges. 1% risk. But if you want to like swing it a bit, if you're pro trend, pro 4-hour order flow, then just take off 80% at 10R if you want to do that, and swing the rest 20% only if it has potential to run to the week 4-hour order flow highs or lows, and only when the risk to reward is above 25 or plus on your final TP. Because if you're closing at 80 here at 10 and you close 20% at like 15 or something, then there's absolutely no point. There's no purpose. It's actually stupid, like, to wait longer just to cash the same amount of money, to make the same amount of money or percentage as me closing fully at 10. And that's why I love 10 a lot, because also 10, a lot of times after it goes to 10, 12, 13R, a lot of times it goes back to break even as well. So I love to capitalize on the full move, like the full percentage, 10R, 10%, instead of like closing partials and then hoping for the best, hoping it goes to like another 30R or something. Yeah. Hopefully that makes sense. Any questions? Raise your hands if you want. 100 ticks is 1 pip. Yeah, as you can see, well, on this one, 10. Wait, let me just check. What is it? Entry 1,000. What is it? 1,000 ticks profit level. Yeah, so it'd be 100. 100 is 1. Yeah, 100 is 1 pip. 10 points is 1 pip. Yeah, so 100 ticks. This is 100 ticks. Is 1 pip. So 10 points. Yeah, 1 pip. I use Pepperstone. Yes. It doesn't matter how 1 minute order flow comes into the 5-minute chalk after that. Yeah, it doesn't matter if the 5-minute chalk happens, right? It doesn't matter if the 1 minute is like coming down bearish, right? Still, you can take a 15-second chalk from there. Okay. That's the biggest problem. Cutting trade short and not letting the edge play properly. Yeah, that's a big problem, Does the DCE rule is also valid for the 4-hour play? Nah, like you don't need these double confirmation. Like once it comes in, like I showed you earlier, it already has 5 confirmations already. Like, and the 15-second is in your favor already, which is the main part of this plan. Is like if the 1 minute range is large and the 15-second is like bearish to come back into the POI, then wait for that 15-second to go bullish again. So this one already is part. That is the entry. That 15-second has to be bullish. Anyways, this one obviously, making sure that 15-second has that extra confirmation to go back to bearish is very important. That's why this rule applies a lot more to this scenario than this is already part of the rule anyways. So you don't need another 15-second after that alignment. You just take it. And as you can see, it works out so often. It works very well. Like the trade I took up here as well, same thing. If you remember this day, this is when I passed like the 300k MFF challenge from this trade. Same scenario, like 5-minute coming out of a 4-hour POI. Like all of this was a 4-hour POI basically on the left. 5-minute chucks bearish from here to here, pushed in, push out, takes the high, takes the low, continues to continue lower pricing like this, new range from here to here, comes into the premium, comes into a 1 minute POI, simply take a 15-second chalk. Yeah. Comes in, I think it was like 2 minute something POI here, and then 15 seconds right there. Yeah, takes the high, takes the low, push in, 15 seconds. Stop loss was a little bit big, but it is what it is. It was a 300k account, so I was like, yeah, I want to make sure it's a safe stop loss. If you know what I'm saying. Trade like cash machine, execute flawlessly is a goal. Yeah, man, it applies to trading and applies to life as well. Like everything that you do, any goals that you have, that's how you should approach life. When you move to break even, are you doing it exactly on your entry? Yeah, exactly on entry. Because break evens, there's no commissions really on this pair, so break even is break even. Like you don't lose anything. When do you use 15 seconds? Oh yeah, I just showed you. Yeah. Why were you still taking 5-minute ranges out of the 4-hour POI? Because it was super close still in the 4-hour POI. Where is it? Oh, it's here. Because like I said earlier, that the 4-hour POI is here, and as you can see, all these trades were still like around, like just coming out of that 4-hour POI. I will still take them here if it's following the flow, but until it comes out into like a 15-minute, like at this point we are in a 15-minute supply zone here. Yeah, because you see it's one bearish candle, it's engulfing 3 bullish candles, so that makes your whole supply zone right here. So as soon as it comes into that, I'm never going to look for a 5-minute entry. Yeah, only down here to catch them. Couple of trades coming up, that's it. Take your 10R, close the trade, because what price could do now is possibly do this, come lower before going higher, right? So you have to be very logical and take your 5-minute entries, in the POI 4-hour, or just coming out of it, just close by. Yeah. But if the 15-minute chocks, let's say the 15-minute and the 5-minute is the same range. Let's say this to this, and it's the 5-minute and the 15-minute. Yeah. And it chocks like this, right? So now the 50-minute and the 5-minute has chopped. If you put in the chat, like, what do you think I'm going to use? Am I going to use a 5-minute range rule, or am I use a 15-minute rule? Which one am I use? 5:15.
Still the 5-minute.
Let's see what everyone says. It's close. I mean, it's like 50-50. Okay, no. Yeah, no. Yeah. Yeah, the 5-minute one. Yeah, the 5-minute rule, right? Because it's the first trade coming out of the 4-hour POI, so I'll still use the 5-minute rule. Okay. But if it was like, let's say it's done a 15-minute chalk like this, and then it continues like this, then yeah, now 15-minute rule only. Yeah, 15-minute rules only now from here, right? But on this first one, the 5-minute first chalk comes in like 5 minutes bullish as well. 5-second, what's called the 5-minute rule with the 15-second chalks and the 1-minute POIs are still valid in here, right? That this entry here, okay. So 15 as well. All right. Let's see any questions before I move on to the next one. Let's see. Hold on. He's following 5-minute range. Okay. Charges answer. If price is near for our order flow target, would you play the 15-minute order flow counter trends? You have to unmute yourself for that one. Yeah, I'm not sure what you mean. What else?
Yeah, that's.
Yo, how's it going?
You hear me?
Yeah.
So we have for our order flow, and we have pullback.
Yeah.
Yeah, I have the pullback. at discount. More. Yeah, and we have again the impulsive move. Yeah, when we are here, we will play the 15-minute counter trend.
Oh, I'm gonna talk about this now, actually.
Okay.
Yeah, I'm already gonna talk about this. Don't worry. But to answer your question, like no, I'm not taking no sells here because if it's already coming to discount into a 4-hour demand zone, this could happen. So I'm not gonna take any sells here. Okay.
Okay.
I'd rather wait for buys.
Yeah, that was one. And I have one more about the sweep on Friday's price action.
Yeah.
New York open, I think 2 o'clock. I'm not sure. Here, I think at 1 minute, I didn't know which one has to be swept to. If you go to 1 minute.
15 minutes bullish, right? And then it comes down, flips, breaks.
Yeah, which one? The flip or the extreme has to be swept?
The flip has to break.
The flip.
Yeah. Whatever flips and breaks the range. Yeah.
Okay,
So
because I was not sure which one I had to wait to be swept.
This one.
Okay. Yeah.
No problem. Okay, prop firms there's a 5% drawdown limit, including equity. So if I'm on a trade when 7 comes down, no lavish. That's only if you're like holding that trade the next day. Like if you're holding it one day and it comes like next day, if you're on drawdown, then you get taken out. Like yeah. So that only applies if you're holding trades over days. Like so. Simple thing to do is just close your trade in the day. Like 10 hours does not take 2 days for us. Like it takes about 10 minutes to half an hour to an hour, maybe. Like cash is king. Okay, because I got told this. Okay. Okay. Exactly. We don't trade overnight. Any questions? Okay, Emmy, E26 semi.
Yo, Kash, can you hear me?
Yes, how's it going?
My question is about the scenario where we have a 5-minute and a 15-minute choke inside the 4-hour POI.
Yeah.
We know that you are playing the 5-minute scenario in this case, but are you doing this only when the 5-minute and the 15-minute choke are the same, identical?
Yeah.
Because
only that.
Yeah, if we get the 5-minute and then the 15-minute, I assume that you are not gonna use the 15-minute leg with 1-minute POI, right?
No, of course not. So as you remember here, this gave 5-minute chocks already, yeah. So after it's already given 5-minute chocks, and then it's given 15-minute later, yeah. Then I play the 15-minute moves.
Yeah, I mean you are not combining the two.
No, separate. Only when it's already only when it's already combined. Only if the 5 and 15 is all the same.
Identical.
Yeah, so that identical. Then I use 1-minute POI, 15 second in here. That's it, right?
Yeah, makes sense. And when we are taking 80% of, are we doing this at the week high or the demand, the supply in this case? Because we are not taking. Let's say we are in a long, right? And we are taking 80% of the high or the supply zone because we are not taking buys in a supply, you know?
Exactly. So there's no supply, you know, there's only supply is like the proper valid supply on the left. But this is bullish.
Right. Because that's a weak high and that is not a valid extreme.
Exactly. So then you just target the high.
The high, right. Thanks, man.
No problem. That's only when you pro trend 4-hour. But when you counter 4-hour, then you don't know like how far it may pull back before going again. You see? So just go 10 hours. That's it.
Okay, thanks.
No problem. Just
yeah, man. So always about Friday price action on the 15-minute. If you go on the 15-minute, so you can see that pretty much go before the big push up, just before it shoot up. So on the 15-minute I saw that it broke bullish and then it it broke bearish again, so I didn't think about taking longs at all.
That's good.
So I just wanted to make sure if that was just manipulation of the price or
100%.
Yeah,
100%. Like, as you can tell, what
no, because I thought I had the doubt if I had to consider the new 4 hour POI that formed before, just before that. I don't know if it has formed another 4 hour there. In that case, yeah, maybe I should have taken longs, but not down, more down. I think it was. Oh, was it there?
This was where the 15-minute happened.
Oh, okay, fair enough. Yeah, all good.
Yeah,
all good. Nothing.
Nothing. Just stuff to.
Yeah, so just manipulation, eh? Yeah.
Oh yeah, it's just one of them. Like just before the news and the New York Stock Exchange opened, it just took out all these lows before shooting to the moon.
Yeah, fair enough.
That's just life. If it's not textbook, we leave it out. We stay out of the shit. When it's textbook, that's what we execute.
All good.
Yeah, no worries.
Beautiful. Thank you.
Okay, so let's talk about the fact that if you go into the facts page, and I mentioned this before many times, the fact that when you have a first 15-minute chalk, right, of a 4 hour move, such as 4 hour impulse or correction phase, yeah, that first 15-minute supply demand range can be used still as a POI for entry. All right, let me just leave that here. Shit, can't leave that here. Let me leave it here. All right, so this, right, does everyone understand? The first 15-minute chalk. So let's talk about, let's say, for example, 4 hour, right? Okay. 4 hours bullish, obviously, from here to here, this to this, right? So inside of this low and this high, this low, right? We're obviously gonna get a 15-minute chalk, right? For it to come like lower down or higher up, lower down. Like obviously inside of this, the 15-minute will obviously go bearish to bullish, right? To make that higher pricing. Inside of this, obviously we're gonna see price going up and then shifting on the 15-minute to come back down, right? So it's like this the cycle, yeah? Like 15-minute goes bearish just to make that 4 hour pullback, then 15-minute goes bullish to make that 4 hour impulse phase, right? But what I'm trying to say is that the first 15-minute chop that happens, right? We can still use that demand or use that supply, right? Even if even if the 15-minute continues lower like this and then breaks bullish, meaning that the 15-minute is no longer aligned in your favor to look for this sell, yeah? Whereas in any other time, any other scenario, you should always make sure the 15-minute or the 5-minute is aligned, right, in your direction for longs or sells before taking a trade. Whereas in this scenario, because this is the first 15-minute chalk, the first initiation of sell orders to cause a 4 hour pullback, right, we can still use this 15-minute demand or supply zone, the extreme points especially, to look for a 1-minute chalk scenario, yeah? This scenario here, right? Exactly the same, right? As in 15-minute inducement, 1-minute chalks, 15-second chalks in the 1-minute POIs, right? If there's no 15-minute inducement, we need 1-minute inducement, sweep it, 1-minute chalk, and then 15-second alignment, yeah? Same thing, right? Here, right? The only difference is the 15-minute is coming up bullish towards it, yeah? So yes, it's a little bit more risky, right? Because a 15-minute could do this, continue, but I've seen this play out a lot of times, enough times to definitely take this entry, yeah? Same here, 15-minute chalks bullish here, first time, right? To cause that 4 hour impulse phase, yeah? But to come back down, right, it has to chalk 15-minute bearish to come back down into this, yeah? So now we have to ask ourselves, is this 15-minute inducement? If there's no inducement, then we need to see 1-minute inducement, sweep chalk, 1-minute chalk, then 15 seconds in the entry to take it, okay? So let me just show you an example. So price is, which one is it? Let me just double check. This scenario here, yeah? So let's just rewind it to the, all right, as you can see, look what happened. we have this impulse phase, we have this correction phase back into this 4-hour demand zone, yeah? And then inside of here, we are looking at the 15-minute as the first chuck. Where does it happen? It happens right here. This is what flipped and broke this previous 15-minute range. So if this gets broken, that becomes then your 15-minute chuck, right? It gives a 15-minute chuck, pulls back, we can look for an entry. Even on the 5-minute, we can look for the entry because, like I said, the 4-hour zone, the 15-minute and 5-minute, if they're the same, right, which it was in this scenario, we can look for the buy. And the 1-minute POI, 15-second chuck, we can take it. That's what I took. And a couple of people took this entry to take 10-0, yeah? But now look at what happens afterwards, yeah? Instead of continuing to go and break that 4-hour week high, what happens instead? It pulls back first, right? Just generating more liquidity before higher pricing, right? Equal highs, right? Yeah. Right. So as you can see, like I said, this was your first 15-minute bullish chuck, right? And 15-minute is continuing to go higher, come lower. You know, it's chucked like a couple of times now, right? So for 15-minute to come back into this extreme POI here, right? Obviously, it's going to come back bearish, yeah. But we can still look for the entry here using a 1-minute time frame to get in. Okay, so here we have a 15-minute POI. We have this one bullish candle. It's engulfing these two bearish candles, so we can use both of these as a POI. As you can see, price comes into it, and it also has structural liquidity on the 15-minute, right? This is structural liquidity. This clean, like order flow range, sell to buy, takes its own high, right? Take out this low as structural liquidity, right? That means that on the 1-minute, we don't need to see inducement generated again. We can just simply take 1-minute and then 15-second alignment entries, okay? So let's go on to 1-minute. So 1-minute does this, right? After sweeping this liquidity below here, the structural liquidity in the 15, what do we get, right? We get this 1-minute chuck happens right there, right? And then, you know, there's like, I think there was no entry here. There's equal lows here. I'm simply just waiting for this to sweep. And then we get this 1-minute chuck happens next, right? So after this low, these lows, equal lows got swept, we get a proper 1-minute chuck happens, like this buy to sell, takes the low, this bullish candle, gap in the middle, you know, takes the low clean and takes the high, you know, comes back in for an entry, right? So if we check the 15-second, what happens? Can you see how the 15-second and the 1-minute range is the same? Exactly the same, yeah? There's literally no difference on the 15 and the 1-minute, right? It doesn't have to chuck anything. 15 seconds doesn't have to chuck anything to come back bearish, yeah? If it comes straight back in, you can take this trade, yeah? So this is what I said over here. If the 1-minute range is the same as the 15-second range, you don't need extra confirmation because it's already the same. But if it's slightly different, right? If the 15-second had to chuck something inside of like here to get back in, then you need 15-second alignment, right? Which it even did give, it even gave it here. So trust me, this entry here is like 1000% a valid trade, valid loss, regardless if you take it like from here or you take it from here, whatever you take it, it's a valid loss, perfect, no problem, because look at the next trade. It's an amazing win, you see? So now, right, 1-minute has gone back to bearish. We always need 1-minute to go and give us a bullish chuck, right, for us to take a trade. Right, so we need 1-minute to go bullish now in a 15-minute POI. As you can see, it takes the low, takes the high, yeah? Clean, like this, you know, takes out liquidity, goes and like changes character, nice V-shaped recovery, right? Indication for higher pricing from BFIs, right? This indicates to us that the BFIs have, you know, sold down aggressively to then buy up, meaning this is the best place that they wanted to buy from after sweeping liquidity and everything, aggressively move away. And we want to be involved where they are buying from, like where the demand steps into the market. We also want to be involved in longs where there's demand, right? So as you can see, right, this whole wick then becomes your liquidity sweep wick POI, yeah, for a 15-second chuck. But as you can see on the 15-second, the 1-minute might be bullish, right? But the 15-second comes back bearish, doesn't it? Because can you see how the 1 minute was bullish, but can you see how the 15-second goes from bullish back to bearish, 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 bearish? Yeah. And then look what happens here. Back alignment. Yeah. 15 seconds is now aligned again together with the 1 minute. So simply now when it mitigates, you enter this trade, stop loss below the low, and you're chilling. Yeah. Absolute textbook trade, 1.5 pip stop loss. You know, it's in late New York, so you have to be safe. And yeah, it wicked it. You know, you wouldn't have to get taken out because your stop loss should not be like this low, right? Obviously, make sure you add on spreads. That spread is 1.5. Okay, 1.5 points is your spread. So if your entry is like 15, make sure it's 16.5. So 1.6 pips. Yeah, it's basically like EU. And simply break even. Where's the 1 minute? Break even on the 1 minute there, or 15 seconds. Breaks couple times. What would that be? That would be like 2 hours. Yeah, I just wait for this 1 minute boss, because it could still mitigate your entry, because it's just, you know, it's not the smallest stop loss. If it was like a 1 pip stop loss, for example, I'd be at break even after this 15-second break, and then second break here, I'd be at break even. But when your stop loss size goes like higher, bigger, right, then you want to make sure like it's not going to come down, mitigate, and then go again, right? So that's it. Emmanuel. Wait.
Cash?
Emmanuel first. Yeah, go on, bro.
Yeah. So could you go to the 4 hour for this?
Yeah, sure.
Yeah, like we saw, like this was a 4 hour POI, yeah?
Oh yeah.
And oh wait, or was it before the end?
We're talking about this 4 hour demand zone here.
Oh yeah, and it because it hit this 4 hour POI in the premium, it could have easily went down like that. I think you were talking about this example earlier on. So you shouldn't be looking for buys, or am I wrong?
Oh no, you're looking at it wrong. The 4 hour is here, then bullish now. We're bullish now. You understand?
Okay.
This is just a supply, but it's nothing too significant. Like it's not pro trend. It's not a pro trend supply. It would be pro trend if it was like this. Yeah. That's pro trend, but the pro trend demand is like this. You see?
Oh, okay. So higher time frame intentions changed already, right?
Yeah, it changed here. Okay. From bearish to bullish. Yeah.
Yeah, and technically with this model of the first 15-minute bullish change of character, wouldn't we always be sweeping liquidity when we come back to the extreme? You know what I mean?
Yeah, I mean, but no, because remember, it has to be close to the POI. It can't be like up in the sky. It can't be like up here. You know, it can't be here, right? It has to be right. This is your POI, so it has to be right either above it or inside of it, right? It can't be up here.
Okay, makes sense. So we gotta, if this one wasn't there, we have to look for another 1 minute fake.
Yeah, 1 minute fake chalk, 1 minute like equal lows, something like this, right? Or remember I said earlier, it has to then give you like 1 minute chalk and then inducement after the 1 minute chalk for this POI. So sweeping that 15 seconds later and then take it. Make sense?
Yeah, for sure. Cool, thanks.
Nice. No problem. Go on, bro.
Can I ask?
Yeah, sure.
So on the left we have a 15-minute first pullback.
15-minute, yeah. This.
No. Left, the pullback.
Pullback, yeah.
So here.
Oh yeah, this is your question.
And the extreme. Which one of these is the extreme? Which is the protected?
In this range, you mean?
Yeah, because you said that we can use this for POI. But there are two POIs here. Yeah,
I mean, you can use both. It's not only the extreme, but I want to make sure that it is like basically higher up. You know, I don't like, because if you have too many POIs like here, right? For example, I don't want to be risking my money and taking sell 4 times, right? So I just want to make sure it's up in the premium, up in the discount of like the range, basically. Yeah.
Yeah, because we have a flip and plan extreme, and I didn't know which one I had to use as a POI.
Yeah. This is only valid, before it comes into the discount into the 4 hour demand zone. After it's done this, then I'm not trying to sell here. No, I'm gonna expect this to happen, right? So either it's gonna do the objective or I'm not gonna take the trade. That's it. Yeah.
Okay.
The only way I'm gonna take this trade here is if the 15-minute chuck's bearish, right? Then possibly look for the sell from here. Yeah. The 15-minute chuck, not the 1 minute.
Okay.
Yeah, not the 1 minute. The actual 15-minute range fully changes. Yeah.
Okay, yes.
That's the only difference. But yeah, 50-minute. Like if we get an entry in here, we can take it down. 10 hour, but then this is the real trade I want to catch. Yeah. The pro trend 4 hour. Make sense? Yeah. Perfect. Go on, just.
Eber, can you go back to when price tapped into the 15-minute POI that we saw before on the 1 minute time frame? The 15-minute POI coming from the chalk.
This one.
Yeah. So you said so on the 1 minute coming to the 15-minute POI, it makes a chalk up, right? Yeah. And then it comes down, but you said there were these equal lows here. That's why you didn't take the trade.
Yeah, that's literally why.
Yeah, because I don't know. I would have taken anyway. That's why I wanted to know a little bit better, because it goes equal lows, yeah, but it gives me bullish intent from what I see. So I would have tried to take the trade anyway from there.
But then the thing is, don't you see how there's a 1 minute chop back to bearish as well to get back into this? It's no longer that bullish anymore. You know what I mean?
Yeah, true.
That's the problem with it, and it's also it's just tapping into the POI. Like it could come low. I hate these chucks. The ones that just tap in and then go and chuck on the outside.
Yeah, just a little bit. Yeah.
I actually hate them. I've seen them not work as often. They still work, but I don't want to risk a lot of my money or a lot of it on this trade. I'd rather it come in a bit deeper or chuck inside of the range or something like this.
Yeah, true.
And yeah, yes, this may be 15-minute inducement, but what if it wants to, create some more? It could do so it did. It create equal lows. 1 minute chucks back to bearish here to come down. So look at this bearish flow as well. It's kind of not showing me it wants to go up anymore. So it's aggressively coming down, imbalance everything. So then after
so it probably didn't even give any 15-second shocks there for sure. So
even if it did, I remember I was saying in the group, I was texting, I was like, nah, I'm not. This is not right. The fact that it just does. It gave equal lows and it just wicks higher and came low. This 15-second chuckle was here, right? It just wicks and comes straight back in. It's not showing me that it wants to continue aggressively bullish. No, it's not showing me that. But then after the sweep, it gives you a 1 minute chalk, 15-second chalk. This is the trade. Trust me. This is the one, right? Yes, it failed this time, but then it gave it a second time. This one is perfect. Yeah.
Yeah, all good.
Perfect. Yeah, no worries. Anyone else? Anyone else? Does everyone understand? Yeah. This is how your trades should look like. Every single one. One of these two. Sauce. Nearly 2 hours. Any questions? Anyone? Don't be shy. Real clear. Really clear. Perfect. Going to bed. Yeah, good night, bro. It's in a bit. Another 2 hours to go, yeah? Emmanuel.
Hi again.
Yes.
So sometimes we see for the 15-minute strategy, right? And the 1 minute POIs in the premium or discount are all mitigated with one another, forming a chain.
Oh yeah.
Yeah. So
yeah. I know you're gonna say.
Yeah.
And this is why, if you remember this day, I waited for another 5 minute chop to go bullish. Remember? Do you remember that day? When the POI is all mitigated, wiki price action. Instead of taking 1 minute chuck, I was nah, 5 minute chuck only. and it gave a 5-minute chalk as well. But it just it literally hit my stop loss before, you know, going to the moon. So it was just unlucky that day, but literally like everything I said was just picture perfect in terms of like what I wanted to see, and that's what happened. It was on the live.
Yes. Yeah, but what if it's not in a 4-hour POI and this happens?
It doesn't have to be. In a 15-minute chalk doesn't have to be in a 4-hour POI. A 15-minute can happen anywhere. Yeah, it can happen anywhere. Okay.
Right. Yeah. But as it, like when that happens and we have all the 1-minute mitigations, can we still use, if it's not in a 4-hour POI, we can't use the 5-minute? Yeah.
You're saying like if 15-minute chalks like this and then the 15-minute POI is not clean.
Yeah, like the 15-minute POIs inside of it, like we have a lot of 1-minute mitigations.
1-minute mitigations.
Oh wait.
Forget the
1
minute.
The 1 minute is only for the 5-minute strategy, right?
Yeah.
Oh, okay, yeah. So it has to be in a 4.
Yeah, for the